Hey YouTube, this is the Robinhood Investor. Today I'm going to go over my Robinhood portfolio. Currently I have about $137,000 in my portfolio. In terms of performance, past week it's been down 0.89%, past month up 1.8%, past 3 months up 8.59%, and past year up 17.14%. Past couple months have been really volatile, as you can see, but I haven't sold any of my positions, continue to add more stocks in my portfolio. Let's scroll down a bit. Ethereum, I still have one Ethereum in my Robinhood portfolio, and I have more in my GDAX account. So recently there's been some good news that the SEC does not consider Ethereum a security like stocks and bonds. This is really good news because it's not regulated the same. And the fact that it's not regulated, it continues to be decentralized and no longer have the same oversight, which is the whole point of blockchain technology. It's not under one specific organization or company, and it's dependent on the blockchain technology to verify the information. And I do think Ethereum is one of the cryptocurrencies that's going to do well in the long run just because of the technology itself as well as smart contracts. And if you've been following the cryptocurrency news, a lot of companies are adopting Ethereum blockchain technology, such as Visa, as well as some insurance companies. So I'm pretty bullish on Ethereum in the long run, even though I know recently it dipped, as you can see here. At one point it was up 1381, and then it went down, and it went back up, and now it's in that downward trend. And Bitcoin, I don't have any in my Robinhood portfolio, but I do have a fraction of a Bitcoin in my GDAX account. I think both Ethereum and Bitcoin is worth holding in the long run. With the other cryptocurrencies, I'm a bit skeptical just because it's extremely volatile, and I think there's some redundancy in terms of the coins available, as well as the technology. Scroll down a bit, going into my stocks. So majority, or my largest holdings are Vanguard ETFs. So first one being VOO. I like this one because it's high liquidity, high volume, meaning you can easily get in and out of position. And the expense ratio is really low. Vanguard's pretty standard in terms of, they're known for their low costs. ETFs. So this one tracks the S&P 500. Next one is Vanguard Information Technology. Majority of its holdings are technology companies. This one has, I believe, a 0.1 expense ratio, which is not too bad for a sector-specific ETF. Next, I have Schwab Large Cap ETF. Let's go back in this view. And then next is Spider S&P 500, or SPY. So those are the first three are my largest holdings. Now let's go into the stocks. Apple, or AAPL, ticker symbol. This is a consumer electronics company. They focus on, or the majority of the revenue is iPhone. It's a really good dividend play. Recently, Warren Buffett bought about 5% stake in Apple. The thing about Warren Buffett is that he seeks out really valuable companies at low costs. And the fact that Warren Buffett got into this, I'm even more bullish on Apple. And also, Apple announced that they're going to do a share buyback. So it's going to increase the earnings per share, which is a good thing. Next is Microsoft. They're big on enterprise and consumer business solutions. You might know them for the Windows operating system or Microsoft Office Suite. But they're also doing well with their Azure cloud computing service. So you can see it's continual growth past year as well as past 5 years. It's also a good dividend play. Next one is Boeing. They're big in the aerospace and defense industry. It's the largest global aircraft manufacturer and one of the largest defense contractors in the world based on revenue. It's also a good dividend play. Next, Alibaba. It's a big e-commerce retailer in China. They provide portals for consumer to consumers, business to consumers, as well as business to businesses. And it's the largest retail in terms of total sales. It doesn't have any dividends, but it continues to reinvest back into its growth. Amazon is also an e-commerce company. They're also big with cloud computing. It's actually the largest internet retailer in the world. I'm pretty bullish on Amazon in the long run. As you can see, continual growth. Next is Visa. It's a payment processing company. It's dominant in the rest of the world outside of China with 50% market share. So it's pretty solid in terms of market share. It also pays dividends, which is good. As you can see, it's pretty good growth. Next is Google or Alphabet. It dominates the online advertisement space. They push out advertisements through their search engine or web browser, as well as YouTube and other products we use. Continues to dominate. It's like a duopoly with Facebook. Both Google and Facebook are dominant in the online ad space. But I like Google more because it's more diversified in its products. This is Google Class A, Class C shares. NVIDIA, this one is, they're good. They're doing really well with the GPU market. They're the dominant player. And they provide GPU chips for gaming, cars, mobile computing. And also they recently got into the data center space. As you can see, solid growth. Next is United Health. They're doing well with providing healthcare products and insurance services. As you can see, continual growth. Baozun, it's essentially like the Shopify of China. They provide e-commerce solutions and services, and they have recognized brands under them like Nike, Microsoft, Honda, Panasonic, and Starbucks, just to name a few. So they partner with these companies to provide an online presence in China. As you can see, solid growth. PayPal facilitates online payments and money transfers. Its subsidiaries include Venmo and Braintree. And I think there's a lot of opportunities for growth after recently acquiring iZettle, Hyperwallet, and Simility. So they're going to continue to expand their services they provide and capture more market share domestically and internationally. Activision Blizzard. It's the largest game company and made games like Call of Duty, Destiny, Overwatch, Warcraft, and Starcraft. Pretty solid growth. It dipped a bit recently, April 2018. It went back up. Over past 5 years, doing really well. Berkshire Hathaway. It's a holding company led by Warren Buffett. It wholly owns Geico, Dairy Queen, Fruit of the Loom, and other companies, and partially owns Kraft Heinz, American Express, Wells Fargo, Coca-Cola, Bank of America, and Apple. The fact that they hold such valuable companies. It just continues to collect dividends and captures the growth from these companies. Next is Johnson & Johnson. They provide medical devices, pharmaceutical, and consumer goods. Its well-known consumer products include Band-Aid, Tylenol, Johnson's baby products, and Neutrogena skin products. It's also a very good dividend play. Recently it dipped, so I think it's a good buying opportunity right now. Next is Home Depot. They're in the home improvement space. It dipped earlier this year and then went back up. I think it's a good dividend play as well. 3M, it's a conglomerate company that makes over 55,000 products, including adhesives, protective equipment, medical and dental products, electronic materials, car care products, electronic circuits, and healthcare software, just to name a few of the products. It's also a really good dividend play. It's similar to Johnson & Johnson. It dipped, so I think it's a good buying opportunity now. McDonald's, it's the world's largest restaurant chain by revenue in over 100 countries. I think it's a solid dividend play. It also recently dipped along with the other consumer stocks. Next is AT&T, the world's largest telecom company, second largest provider of mobile telephone services, and largest provider of fixed telephone service in the US market. It's also a really good dividend play with 6.3% dividend yield. In terms of the growth in their price stock, it's been a dip this past year. Past five years, it didn't really grow much, but it's a solid dividend play. Next is iQIYI. It's an online video platform similar to Netflix that caters to the Chinese market. This company recently IPO'd and has been doing really well since. It also dipped recently, so maybe a good buying opportunity. Next is NetEase, another Chinese technology company, and they develop they provide or develop some of China's online PC and mobile games, advertising services, communication services, and e-commerce platforms. This past year it also dipped, so I think it's a good buying opportunity. Past 5 year, it did really well. Procter & Gamble. It's a consumer goods company that specializes in a wide range of cleaning agents, personal care, and hygiene products. Past year, it hasn't done too well, so I think it's a good buying opportunity. It's also a really good dividend play. Next is Taiwan Semiconductor Manufacturer. It's the largest semiconductor manufacturer. So I think this one's a good long-term hold. Constellation Brands produces beer, wine, and spirits. It's the largest beer import company by sales, and it has over 100 brands in its portfolio. Past year did really well. Past 5 years it also did really well. Next couple ones are sector-specific ETFs. So this one's a Vanguard Industrial ETF, Vanguard Healthcare ETF, Vanguard Consumer Discretionary ETF. This one's more cyclical. So currently in a bull market, it's doing really well. Versus consumer staples. It doesn't have as much growth, but it's pretty stable. Not as volatile as the consumer discretionary one. So during a bear market, it'll continue to have steady growth just because they provide products that people need at all times. Next is iShares S&P 500, Schwab Broad Market. Next couple ones are mega cap ETFs, growth and value. Next is Total Stock Market Index, Vanguard ETF, Vanguard Large Cap ETF, and then some dividend ETFs. and then Vanguard Value ETF. And I believe that's it in my portfolio. Yep, that's it. So that's all in my Robinhood portfolio. I plan to continue holding these stocks and ETFs and plan to buy more stocks. I don't plan to sell any of my ETFs, even though I'm going to focus more on stocks. Yeah, I plan to hold for the long term. But yeah, I plan to weight my portfolio towards stocks, preferably a good balance between dividend paying stocks and high growth stocks. The reason why I want to focus on dividend paying stocks is because I plan to hold these stocks long term. So while I'm holding them, I want to capture some passive income through dividends. Otherwise, I would only, if I focused on non-dividend paying stocks, then that means I would only capture the gains when I sell them. But I don't plan to sell any of these holdings anytime soon. So that's why I want to focus on dividend paying stocks. So that's all for this video. What are your top holdings in your portfolio? Comment down below. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.